The Russell 2000s outperforming the Mag 7 by 15% over the past couple weeks. And my next guest says, don't worry about the past head fakes. This shift to small and mid caps is real this time. Here on set is Grisanti. He's chief market strategist at MAI Capital Management. When others say it, I go, I don't know. When you say it, I take it notice. Thanks to your Tesla Verizon pair trade call. The famous home builders call it basically the bottom a couple of years ago. So what's the persuasive case for why this is
sure? There's a couple, Kelly. It's not just me kind of throwing a dart up in the air. It's first of all, the percentage move, as you mentioned, 15% difference in 2 weeks. That's a big deal. But even more important, the standard deviation of the move. That's what us forecasters look like. How different is this to what's happened before? It's huge. In the small cap area, it's the biggest, and it's 3 standard deviations away from norm. So we're talking about a generational event. So that gives me confidence that, look, I don't think the value index, the small caps are going to go straight up, but I do think we've come to a critical turning point.
A lot of people identify the catalyst as that CPI report. And the only thing I don't understand is we had better CPI reports for months. Why did this one finally break the dam?
Sure. I'm not so sure it was the CPI report. I think when you look back, whether it's March of 2000 or whether it's the bottom in March of 2009, you never really know what the reason is. You do know there's a lot of dry kindling. You also know that the pendulum has swung so far, in this case, towards a top-heavy market that for some reason it always comes back. And maybe it was the CPI report, maybe it was bond deals changing. There's lots of reasons in retrospect, but it's happening.
What are the investment conclusions? I mean, is it almost as simple as the rally can keep going?
Yes.
In other words, you could own this. You don't have to care about whether it's small caps or what, but you could, a broad basket of stocks, therefore, should do fine because something has happened. But then I think about March 2000, and that wasn't true. I mean, that was more a signal of a dot-com crash.
Right. So I think there's 2 things that give you confidence that it's not too late. First of all, just look at the stats. Yeah, this 15% move is a terrific move in 2 weeks, but there's still maybe 25% difference between the equal-weighted S&P and the market cap-weighted S&P since the beginning of last year, still even with the current move. So there's lots of room to make it up. So the second thing is that it just takes a little bit of money moving away from these mega caps in order to make a huge difference. My great example, you know I like Hershey's. So you take 1% off Microsoft, you can buy an entire Hershey's.
Wow.
So
yeah. if 1% of the money comes out of Microsoft, Hershey's could double, basically.
Right. Now, of course, it won't all go into Hershey's, but that's the kind of magnitude of the move. They've gotten so top-heavy that even 5 or 10% coming off those can really make a difference in the mid and small cap market.
So we've talked Hershey, what are the specific areas where you think there are maybe stock-specific stories or things that can do well right now?
Sure, I call them the left behind. So we're talking about stuff that wasn't caught up in the tech AI bubble.
The rise of the rest.
Right, exactly. Right. And so they're great companies, but capital, like it did in the internet bubble, got sucked away towards tech. So Hershey's would be a great example. Airbus Industry, the European plane manufacturer, it's having some supply chain problems in the short term. Long term, their backlog is just terrific. You've got United Health Group, which is suffering through an election year. Tough to be a healthcare company in an election year.
That's had a good couple weeks as
well.
I mean,
so again, it's playing the same wave. And finally, Take-Two Interactive, which is going to come out with Grand Theft Auto. So it's a variety of lots of different stocks. The commonality is only that they haven't been caught up in the AI boom.
That's really interesting. So you think this is kind of the catch-up of the rest. It doesn't have to be small caps per se. It doesn't have to be a call on energy or financials or anything like that.
No, my favorite way to look at it is equal weight versus market cap weight. The equal weight stocks have languished for 18 months now. And historically, the equal weight actually outperform the larger stocks over a 35-year period by an average of about 1%. They've underperformed over the last 18 months by over 25%.
Now I'm like, should I put equal weight in the 401k then?
I'm not telling you what to do.
This is not investment advice.
But yeah, it's certainly, the pendulum swings and it always comes back. So I'm more attracted to the equal weight than I am to the Mag 7.
Quick last question then, what happens with the Mag 7? I mean, the reason why I'm so sympathetic to their outperformance is because look at the earnings differential. First quarter, they were up, Fab 5 up 84%, rest of the market 5%.
Well, if there's anything I want to do, I don't want to leave your viewers with the thought that I don't like the Mag 7. Terrific cash flow generation, as you're pointing out. The problem is they've just sucked up too much of the capital. So my thought is stop overweighting them, stop even equal weighting them, take some money off the table, and get to the other folks fast before the market really shifts that way, and you can make some money.